Nvidia is scheduled to report quarterly financial results after the stock market's close on August 27, 2025. Investors are asking me if they should buy Nvidia stock before the company announces earnings. The reason they want to know before or after this specific event is because earnings releases tend to create huge volatility in stock prices where the price moves more than usual. It's not uncommon to see share prices jump up or down by 40 or 50% following an earnings release. So it can have a big impact on your investment. So the timing of that decision has become critically important for investors like yourself. So I'll answer the question of what I think about Nvidia stock, what to look for from the company in the upcoming earnings release. I'll highlight the big picture items you need to look out for during the company's financial update. And I'll answer what I think about the company, whether I think it's a buy, hold, or a sell, and the specific timing purchases surrounding the company's quarterly earnings release. I'll also share with you my proprietary discounted cash flow valuation for Nvidia stock, which calculates what I think to be the fair value for this business. I updated this valuation today. I increased the intrinsic value per share because I upgraded the company's growth expectations over the next several years because the results of this company's look-ahead forecast is much better than I was expecting. So when Nvidia reported their most recent results, they told investors they generated $44 billion in revenue in their first quarter of fiscal year 2026. Yes, companies are allowed to have fiscal years and quarters that are different from calendar years and calendar quarters. It's just something about our financial system that companies are allowed to do this. It makes it confusing for analysts and investors like yourself, but companies are allowed to do this. So they're now going to report their results for second quarter fiscal year 2026 on August 27th, which is still in 2025 in calendar year. I know, right? So the company's 69% revenue growth increase in the first quarter was generating strong profit margins, but there was something that caused the profit margins to decline, and that had to do with export restrictions to China for a specific product, which I'll discuss a little bit later. The company's operating income still increased despite that multi-billion-dollar headwind. Its operating income increased by 28% to $21.6 billion. Its gross profit margins and operating income would have been significantly higher had it not been for that export restriction.
Click the link below to watch the full video.